a lot of times there is a message in the markets, but do you think that that's something you can bank on? Can you decide how you feel about inflationary pressure from the option markets, in your view?
I think the way I would kind of frame it for people who are trying to use this information in a tradable way is, look, if you kind of look at the issues going on in Kroger and in consumer staples in general, and you say, I actually think this is persistent, I don't think it's transitory, then your key takeaway, Joe, is that 6 months out, the consumer staples sector is really cheap to hedge right now. So if you're going to make an inflationary play, you may be better off doing that in the staples sector through XLP than you would be in XLI, where it's kind of remarkably already priced in.
Does reopening, reclosing, Delta variants, does that have anything to do with how you feel about, or how investors feel about consumer staples?
Yeah, that's definitely part of it. One thing I wrote in the note is 6 to 12 months out, there's obviously also being baked in kind of what's going to happen with taxes. So that could be part of it. Overall option sentiment. So just taking S&P has been just glum. I mean, it's been very bearish kind of the whole way through. So, on an overall market basis, the market has been very well positioned to hedge downside. It really hasn't done much to the upside. Everyone, has been long this market, but owning hedges along the way.
Gabriella, uncertainty, markets don't like uncertainty. We always point out, when is there not uncertainty? But you seem to be indicating that right now it's a period where there are many, many questions and nobody has answers. I'm wondering whether that's unique. And then you actually use a phrase that I love because we've used it here. There's a lot of noise, but not enough signal, because we'd like to find the signal through the noise. What do you mean?
That's right. I think as we're entering the fall here, there are a lot of questions that need to be settled before the market can grind higher and we get some clear leadership here between cyclicals and defensives. So the questions really are whether the third quarter growth slowdown will fade and growth will ramp back up in the fourth quarter and next year, whether inflation the pop will prove to be transitory, whether 2022 earnings expectations can continue to be revised higher, whether the rest of the world can pick up the growth baton, and here especially expecting a pickup in Asia, and lastly, whether technicals will stop depressing bond yields. And I think we're in a period here where we're not going to get conclusive data that answer these questions one way or the other. So we will get CPI data, for example, this morning. We might see a second month of moderation in inflation pressure and things like used cars, lodging, and transportation. But you will continue to see some supply-driven effects in goods prices. So we're unlikely to settle those questions for a little bit longer. What that means is that the market continues to be a bit sideways without a clear leadership or narrative for a little bit longer before we resolve these questions, we think, in the more positive direction, and the market continues to grind higher over the next 12 to 18 months, with cyclicals taking the baton back from growth.